I think macro, since you mentioned it, doesn't matter, right? Like there's an element as an investor that you're always fighting the last battle. And the last battle in crypto was all about interest rates and inflation. What was Jerome Powell doing was the most important thing happening in the crypto market. What the latest CPI or PPI, we stood on edge waiting for that. That defined our week, our month, our quarter. Now, who cares? The Fed lowers rates by 25 basis points. Who cares? The US is establishing a strategic Bitcoin reserve. The Fed raises rates by 25 basis points. Who cares? Larry Fink says Bitcoin's going to $500,000 or beyond.
One of the most striking points Hougan makes is the staggering $1 billion inflow into Bitcoin ETF over just 2 days, coupled with $150 million into Ethereum ETF. These figures underscore the growing mainstream acceptance of crypto assets within traditional financial markets. Hougan emphasizes that this trend signals not just a spike in interest, but a broader validation of the asset class. However, he cautions that not all crypto assets will benefit equally. While some assets are zombie coins with little to no investor interest, emergent and innovative projects are likely to attract disproportionate inflows. This suggests that expertise in identifying promising assets will be crucial for investors seeking to capitalize on the next wave of crypto adoption.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We had $1 billion in flows into the Bitcoin ETFs over the last 2 days. Not Bitwise, but as an industry, $1 billion in 2 days. We had 150 million into Ethereum ETFs. It's like the not dead yet parrot. Those things are going to be very significant in the future. I agree with Ryan. We're likely to see a large number of ETPs launch. We don't really know that yet, specifically in terms of when and where, because conversations are just opening up with the staff. But you have to imagine that the windows are open. One thing that I think will be interesting and maybe surprising, people might imagine that if you looked at the market cap of every asset, it would get a proportional amount of flows. I don't think that's what's going to happen. There's some large cap crypto assets that are effectively zombie coins, which no one is interested in allocating to. I suspect if those ETFs launch, no one will buy them because there's no proximate reason. And then there are assets that are really emergent that people are excited about. And I think those would attract significant flows, probably in excess of their market cap. So I think you need to put a little bit of sort of like your crypto native expertise when you're estimating flows. I don't think it's going to be a linear relationship, which I think many people assume. I think macro, since you mentioned it, doesn't matter, right? Like there's an element as an investor that you're always fighting the last battle. And the last battle in crypto was all about interest rates and inflation. What was Jerome Powell doing was the most important thing happening in the crypto market. What the latest CPI or PPI, we stood on edge waiting for that. That defined our week, our month, our quarter. Now, who cares? The Fed lowers rates by 25 basis points. Who cares? The US is establishing a strategic Bitcoin reserve. The Fed raises rates by 25 basis points. Who cares? Larry Fink says Bitcoin's going to $500,000 or beyond. I don't know, the CPI comes in 0.2 percentage points hot because there was a automobile manufacturing issue. Who cares, right? Solana is no longer in the regulatory doghouse. Ethereum has lost a little bit of its regulatory moat. The world's largest banks are building on crypto. Those things are 100 times bigger than these 25 basis point things that we used to worry about. So I think the game has just shifted. What matters now is what we see out of the White House, what we see out of Congress, and importantly, what we see out of venture capitalists and builders. I'm betting that we're entering this golden age of crypto where we're going to see 1 million new entrepreneurs building serious projects openly on blockchains and traditional companies building serious projects on blockchain. That's what I'm tracking. And I've just sort of discarded Jerome Powell. He can do what he wants to do in the corner. He can play with his toys, but there's a bigger game afoot, I think, in crypto. And that's what I'm focused on. There's 70 publicly traded companies. There are hundreds of private companies, including Bitwise, that keep Bitcoin on their balance sheet. And those 70 companies is going to become, in my view, a couple hundred this year. I don't often talk about arcane accounting laws, but I'm going to here because I think it's important. Until January 1st of this year, there was an accounting rule for publicly traded companies that if they bought Bitcoin, it was quote unquote an intangible asset subject to impairment testing, which in English means when you bought it, you would mark down the price you bought it. And if the price ever fell, you would mark it down. And then if it fell again, you would mark it down. And you could never mark it back up. So if you bought it at 50K and it went to 25K, you marked it at 25K, it ripped to 100, you had to hold it at 25K. So in other words, these 70 pioneers, yeah, believe it or not, this is true. These 70 pioneers put it on their balance sheet knowing it would only ever cause them to have lower earnings and lower asset values than in the past. They were still willing to do it. And that changed January 1st. There's a new FASB accounting rule. So now it's marked in all their genius. Now it's marked at the value of Bitcoin. Imagine that. It took them years to get to that. So now if someone is bullish on Bitcoin, they can put it on their balance sheet. And when it goes up, it adds to their earnings and adds to their asset value. If you're skeptical of this trend, just imagine that 70 publicly traded companies were willing to put their necks on the guillotine for an asset that can only go down in value. What happens when that's no longer true? What happens when the reputational risk around Bitcoin evaporates because the president is pro-Bitcoin and Congress is pro-Bitcoin? That 70 is going to go to 700 is my guess. For the same reason people buy Bitcoin, companies are going to buy Bitcoin. And the scale is significant, right? Remember, there are only 170,000 new Bitcoin produced every year. That's the supply. Last year, corporations bought something like 250, 270, 300,000 Bitcoin, more than all the supply. In this terrible accounting world, they could be buying 2, 3, 4x the supply. So I think this is a trend because people don't sort of understand this accounting quirk that they dramatically undercount. And I think it's going to be much bigger this year than people anticipate.
One of Hougan's most compelling arguments is the underestimated impact of ETF adoption. Many analysts focus solely on new investors entering the market. However, Hougan points out that existing investors will likely continue to accumulate over time. Just as individual Bitcoin holders often increase their positions incrementally, ETF investors are expected to double or triple their holdings as they gain confidence in the asset. This compounding effect means that even if no new investors enter the market, flows into Bitcoin and Ethereum ETFs could still reach record levels. Combined with new entrants, this trend sets the stage for exponential growth in asset prices.
The other fear it removes, to me, or at least really limits, is the risk of governments banning Bitcoin. I know when I moved full-time into crypto, people would ask me these questions. What about criminal use? What about environmental use? Aren't there, you can't buy coffee with it. And I felt like Neo in the Matrix, like it was so easy to deflect all of these challenges. But then what if governments ban it? And my mind would go, well, that would be bad. And I actually couldn't see to the point how Bitcoin would come around to co-opt governments. And it felt like the last existential risk was a coordinated government banning across multiple countries, maybe across the G20. That would have been really bad. It would force Bitcoin underground. And somehow, because Bitcoin is on this incredible journey, it found a way to co-opt governments. If that happens in 2025, I think it's straight to many hundreds of thousands or millions become within view. So I think it's really important from that perspective as well, of eliminating that last existential. It should happen, right? Because it's in their best interest, because you have this element of Pascal's wager where it's a low cost option. And if you don't participate, you're really long-term in a bad place. And so I have a very high degree of confidence that will happen, but politics is driven by people, and people are weird, and it's not 100%. Ryan may disagree. He may think it's 100%. He can shut me down. But I think it's going to happen, and I think it's going to happen fast. But of course, there's a chance it doesn't materialize in the way we think. Trump says, we'll keep our Bitcoin, we're not buying more. And then our countries are like, So that could happen. I don't think it's my base case. I don't know what you think, Ryan. Analysts who are just coming up are now running these giant asset managers that are all in on ETFs, and it's gone from $100 million to a $10 trillion industry. The other thing I would point out that I think people overlook, all the people who bought Bitcoin ETFs last year are going to buy more. There's this assumption that people like invested once and they're done, but ask yourself, think about how much Bitcoin you own today. Did you buy all of that on day one? No, of course not. You dipped your toe in the water. I think if literally no new investor bought a Bitcoin or Ethereum ETF in 2025, and it was only the people who bought in 2024, we would still have record flows. I think they're going to double down and triple down on this asset, and people overlook that. They assume it's just these people who haven't come in. I agree that's massive, and that's a decade-long trend. But once people are in, they all buy other assets, they buy more of the asset, and I think that alone is a tailwind that probably the market doesn't appreciate. If I think about the value of any crypto asset, let's take Ethereum, there's an element that's speculative and an element that's fundamental. There's expectations that Ethereum will be more useful in the future, and there's actual day-to-day fees flowing through the Ethereum network and billions of dollars of users. I think the speculative element is being unleashed before we get the regulation. We don't need regulation for people to realize that Solana is now open to more use cases than it was 2 weeks ago. We don't need regulation to know that the Bank of America is talking at Davos about building on blockchains, and they weren't 2 weeks ago. So you can unleash that speculative element. I still think we're early in that. The fundamental piece where we start to see cash flow and we start to see users and we start to see new applications, that still needs regulatory clarity, right? Because if you're building a new DeFi protocol, can you have a fee switch? I don't know, right? If you're launching a new blockchain, what percentage can be held by insiders versus outsiders? I don't know, right? If you want to trade a securitized asset in a tokenized format through a broker dealer, those can't exist right now. How will that happen? I don't know. So we need that regulatory progress to unleash the fundamental aspect, but you're going to see people re-rate the speculative asset over the next few months, and I think re-rate it substantially higher as they realize, to go back to where we started, that the shift has been really significant.
Hougan distinguishes between the speculative and fundamental drivers of crypto value. Speculative drivers, such as market sentiment and emerging narratives, can operate independently of regulatory clarity. For example, the recognition that Solana is no longer in the regulatory doghouse or that major banks are exploring blockchain technology can ignite speculative re-rating of assets. However, unlocking the full potential of crypto requires regulatory clarity. Questions around DeFi fees, token distribution, and securitized assets remain unresolved.